Okay, good in last 6 months, but dull in last 3 years. That's HDFC Bank for you. And whichever way you look at HDFC Bank, I mean, more than if you extend the timeline for more than a year, it has been a massive underperformer. And let's really establish that. Let's look at just the Bank Nifty and HDFC Bank last 1 year and last 3 years. I think 3 years is a reasonable time frame because that's where all the entire merger effect of HDFC Bank and HDFC Limited in a sense would at play. And there you'll see that there is serious underperformance. The Bank Nifty last, which has been by the way an underperforming index, is given a return of 45%. What has HDFC Bank given? 20%. And this includes the recent bout of outperformance. So the point I'm trying to make here is that HDFC Bank has been a rank underperformer. They've suffered because of merger issues. They've suffered because they had to slow down their growth. They've suffered because they had to take a lot of provisioning into their balance sheet. And they've slowed down. Why? Because they were in a process of retiring their old and expensive loans. Are we at the beginning of a new dawn? I think it is still a work in progress for HDFC Bank really to see that mojo coming back in terms of earnings. I think it is still 2 quarters away. The good thing for HDFC Bank is that they've kept their market share gain intact, which is their market share gain in most of the areas in which they operate. I think is quite reasonable, whether it is in the card business, whether it is in the market share of getting new accounts, whether it is in the AMC business. They've kept their market share intact, and real estate home loan is where they're building up. So that's good for HDFC Bank. Then is the technical factor. For me, the real strength in HDFC Bank, and I noticed it when we looked at the FI selling data, and the FI selling data in November, October and December has been quite intense if you look at the sum total of October, November, and yet HDFC Bank in the last 3 months has gone higher even though it's an FI dominated stocks. So when a stock goes against the market, and especially when large shareholders or regional investors, which is foreign institutional investors, if they're selling and if the stock is going higher, that clearly means that FIs are no longer in a mood to sell HDFC Bank. They're making an exemption there. That means the technical overhang also gets over. So I think if it is part of a long-term portfolio, keep it. In the short term, however, because of the factors which I just mentioned, I think there is scope for HDFC Bank, and Kunal and me were discussing this, can easily cross 2000 very quickly.